Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up with the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Friday, August 27th. Great to have you here with us once again. I am your host, Jesse Allen. Thanks for joining us here today. MarketTalkAg.com. That's our home on the web. MarketTalkAg.com. Find all of our streaming sources there, all of our radio affiliates, and much, much more. It's all online. MarketTalkAg.com. Well, we had a fairly quiet end to our trading week here as we take a survey of the markets today. And here to talk about it with us and maybe do some explaining for us of what we saw here today is Kent Beadle with CHS Hedging joining us today on Market Talk. Kent, great to have you on the show, sir. How are you?
Yeah, I'm doing great, and I appreciate the opportunity to be with you today.
Kent, thank you so much for jumping in here on this Friday afternoon. And as I kind of indicated at the open, fairly quiet to wrap up the week here this week, especially that corn market. We saw a little bit of strength there today, but fairly range bound. And beans were under some pressure with some of those rains moving through the northern tier of the country. And wheat was a little lower today. But overall, just your thoughts, maybe picking back off some of those observations of mine, or if you have some other observations, just what we saw here to kind of wrap up the week this week.
Well, I don't think it was a bad week all in all. First, clearly a higher weekly close on the heels of what was a pretty rough week last week. Last week the market was all worried about Fed tapering as well as COVID and all of the crop tour information. This week, I think that we got a couple of other inputs that helped us firm a little bit. Number one, there was a lot of rumors last week about the RFS and what might be going on with potential obligations for refiners. And I think the marketplace started to realize, number one, that those were rumors. Number two, that any actual obligations that will be finalized are going to be a long ways out into the future yet. And probably most importantly, understanding that any changes for 2021 in those obligations are not actually going to have any impact on demand for corn or soybean oil, which is what the market was really concerned about last week. You think about obligations for 2021. Well, it's the end of August. We only have a third of the year left. Okay, so this is all about dollars and cents for refiners and RIN prices, and not actual physical demand for corn, soybean oil in the blending of or in the creation of biodiesel and ethanol. So that I think helped us a little bit. Clearly, the dollar, which had kind of surged, fell back this week. And we certainly had a highlight today with Federal Reserve Chairman Powell parsing the difference between tapering, which everybody was concerned about last week, as it was going to immediately lead to higher interest rates, and then what the Fed's actual criteria is going to be to raise interest rates, which is going to be a lot different and a lot more stringent than what it's going to take for them to taper asset purchases. And so that gave the market a fair amount of comfort that interest rates are not going to be rising anytime soon, which obviously hurt the dollar to some extent and helped commodity prices generally. And you just kind of saw that across the spectrum. I think the third thing that happened this week of interest, you mentioned the amount of rainfall that we had in the northwest part of the Corn Belt. And, we had a kind of a start of a change happening last week when we had a fairly sizable amount of rain in central North Dakota. That kind of expanded this week, and we got as much rain in Minnesota and in South Dakota as we may have had all year. I would tell you some growers I know probably doubled the amount of moisture that they received going all the way back to April. So this is, unfortunately, in some cases, it's too little too late. It certainly stabilizes whatever the potential was. But I don't know that we added a whole lot of bushels into the equation. And unfortunately, we lost some bushels in some areas too, because this weather came with some hail and some heavy wind, and stock quality in the corn out there is not very good. And we definitely saw some loss of ears and some corn that actually blew down. And so it's really hard to assess just what we might have gained in some test weight versus what we lost in actual acres of production. In the end, I think the marketplace realized that we still have a very tight situation going forward, and we were getting a little bit cheap. And we had a nice rebound this week.
I'd like some more thoughts on the Jackson Hole Symposium and the comments from Fed Chair Powell, Kent. Do you think the market maybe priced in some expectations for what Fed Chair Powell said, or do you think we might see the market maybe take some more of that into consideration as we get into next week with just some of his comments about tapering, but maybe waiting on interest rates a little bit?
Well, I think that the tapering piece was, clearly getting priced in, and it had been rumored for a while, and certainly there was some public discussion by some other Fed chair or Fed presidents, excuse me, that was the path that they would like to see the Fed take. But what I think happened today is that Chairman Powell reiterated the idea that they are going to be slow on the interest rate hike front, and that the old adage that the job of the Fed was to take the punch bowl away just right when the party's getting going. I think they want to let the party go for a little bit, and they'd like to see if you actually can generate a certain amount of inflation, because the truth is that their 2% inflation target hadn't been met for a very, very long time. And so, we've almost been in a deflationary cycle, or certainly a cycle where prices have been very steady and stagnant for a long time, primarily driven by increases in productivity that allow for that to happen. But they would like to see a little more inflation, and they reiterated today that they feel that the excess inflation in the market today, the 3.5% area where things are kind of sitting right now, they still believe that that's transitory, and that's going to fall back. They also reiterated that if they see evidence that that inflation is not so transitory, and that it is starting to potentially hurt the economy, and especially folks on the bottom end where higher prices would be impacted dramatically by that, that they'll move. But right now they don't believe that this is anything more than kind of a temporary blip that has a lot to do with the aftermath of COVID, supply chain issues, and some supply and demand shortages, specifically in our grains, that could easily be rectified with a couple of good crops.
Kent, I'd love some thoughts possibly on what you are seeing with regards to cash markets right now. I know we're seeing some fairly strong basis numbers here. And, with corn, for instance, we've had a pretty tight range lately. And soybeans, we've kind of settled in now around this 13.20, 13.30 mark on the futures board. But talk about what you're seeing with the cash markets, and just maybe some thoughts for growers here as they're getting set for harvest, and maybe looking at their marketing a little bit closer here before they start getting into the fields.
Well, there's, first of all, there's probably 4 quadrants you've got to look at here. First of all, whether we're dealing with old crop cash or new crop cash, and then we're talking about whether or not we're in the Eastern Corn Belt or the Western Corn Belt. Okay, let's start with the old crop versus new crop. The clock is ticking, right? We are moving every day is a day closer to actual bushels being available into the marketplace. And in fact, there is some early harvest that we're aware of that's taking place in southern Illinois right now, as well as ongoing harvest in parts of the Delta that we've had. I think this past Monday statistics said Texas was already 25% harvested. This is not out of the ordinary. We typically have some bushels at this time of the year. But the key here is that we have very, very strong basis levels and we have inverted markets. But even though the market probably doesn't have as much as it would like to have, it will only buy the last bushel it needs to buy at these higher prices. And every time it buys another bushel, it gets them that much closer to being covered into new crop. So if you still have old crop inventory of any sort, you should be marketing it because the basis inverse is not going to be there much longer. The second thing that we're seeing is as we think about the U.S. geographically, our new crop basis bids in the Western Corn Belt, where we are going to be particularly challenged with yield due to the drought, are very, very strong. Okay, I've seen some of the strongest historical harvest time basis levels in corn in places like Western Minnesota, in South Dakota, that I have ever seen. All right, these are extraordinarily tight levels because we have an export sales program on the books. We have a lot of corn for new crop already sold to the Chinese. And, where does that corn typically come from? Well, a lot of it has tended to source out of the upper Midwest, be railed to the West Coast and sold to the China. That's typically the cheapest way to get commodity into China. And we're just not going to have much. And the ethanol plants know it, and they're doing their very best to put bids out there to keep the corn moving toward the ethanol plants and away from the West Coast shippers. What ultimately is going to have to happen here, because we have good crops and maybe record crops in Illinois and Indiana and Ohio, is that you're going to have to set up a price structure that's going to have to set up grain moving from east to west this year. 2 years ago, we were watching it go in the other direction. We were seeing it go from west to east. Now it's going to have to go in a different direction. And you're just going to see basis levels adjust themselves in order to account for that economic flow that's going to happen.
Kent, great insight there. As always, we appreciate that. Looking at livestock here as we wrap up the week, just love some thoughts. I know cattle was fairly muted and mixed today, while the hog market saw a good, strong day on Friday to wrap up the week. Do you have any thoughts for us in our livestock markets today?
Well, first of all, when you look at hog prices, not just for the week, but maybe on a broader long-term degree, they continue to work themselves essentially sideways within a range. And, we were pushing down maybe against the lower part of that range over the last couple of weeks, and now we've recovered a little bit. There's an awful lot of concern, of course, about the fact that ASF was discovered a few weeks ago in the Caribbean. I think that triggered an awful lot of hedging going on from, hog producers across the U.S. Most people know and understand that if we would happen to get that disease here in the U.S., that our export markets would be essentially disappearing for a period of time, and the backup of supplies would really weigh on prices. And of course, there are some margins out there to be hedged and locked in, and so that's where some of the weaknesses come from. There's a flip side to that, of course, and that is that beyond the concerns about ASF, some of the underlying fundamentals in hogs have been pretty solid. Cash prices are still, strong for this time of year. While we're not exporting as much to China, we are exporting more to Mexico. We believe there's still a pretty solid demand across not just the U.S. but around the world in a post-COVID environment for more protein. So that and the fact that we've had a kind of a rough year production-wise due to PRRS and other disease issues here in the U.S., our supplies just aren't as big as we thought they were going to be. And when you don't get ASF, even though you're worried about it and it generates some hedge pressure, you can't trade that every day because otherwise you're eventually going to be at zero, and yet that you don't have a problem and there's an awful lot of demand to meet that supply, and pretty soon you rebound. And this give and take sort of leaves us in a trading range, quite frankly. When you look over to the cattle side of things, a pretty good week, especially the deferreds here over these past couple of weeks, and it kind of felt like we just decided to take a little bit of a breather. Excuse me. Front month cash is firm, but really not advancing all that much. And I sense there's an appetite out there for cattle. Basis levels that have been paid to the producers that I work with have been pretty solid here these past couple of weeks. You're not going to get much of a pullback in this environment, at least not right now. And of course, if you were to have something happen to hogs, well, that might spur some demand over to beef as well, and that's in the background minds of everybody. But it's just kind of a quiet, nondescript week when it comes right down to it.
Well, Kent, great insight as always. And I know producers need a little advice from you and the other team members there at CHS Hedging. I'm sure the easiest way is to find you guys online or give you a phone call to get a little advice, can't they?
Yeah, our website is www.chshedging.com, and we can be reached at 800-328-6530. I'll be more than happy to take the time to talk with any of your listeners, and we'd love to have the opportunity to earn their business.
Kent, we appreciate the time. Thanks for joining us for a little bit here on this Friday afternoon, and we'll get you back on soon. Thanks so much. Have a great weekend.
Great, Jesse. Thank you very much.
Kent Beadle with CHS Hedging, our guest today here on Market Talk for this Friday, August 27th. I'm Jesse Allen reporting.